Welcome traders. Today is December the 2nd and we are rolling into approximately 3 o'clock p.m. Eastern Standard Time and closing in on end of week and market close here. And the title of this video is, well, I haven't titled it yet because I'm doing this video as a live stream before I publish it, but imagine it's going to have something to do with the housing chart that I have posted there as a screen preview to the video. And what we're going to focus on in this episode of the weekly update is the housing market and the chart that I have posted. Let's just jump straight into the chart here. The chart that I had on the splash screen was U.S. states pending home sales index. All right, and this is the year-over-year chart. This data comes from National Association of Realtors. If you're having trouble seeing the ticker symbol because resolution of the video or whatnot, you just simply go up here and do your search like you would for any other ticker symbol and just type in United States pending home sales, and you'll have a month-over-month chart and a year-over-year. This is the year-over-year, and what we're looking at here, guys, is a ominous indicator of what the future holds for us. All right, it's never good to see U.S. housing market crash like this or in this fashion. It always indicates, it is a lead indicator of what forebodes in the future. All right, so we need to keep this data in our back pocket at all times, and that's why I've put it on my leaders list here on TradingView. I want to be cognizant of what's happening in the U.S. housing market. Of course, I covered this a little bit in the last video as well. Let's get rid of my little house there because that's going to stick over into the next screen. I want to cover that chart that I covered briefly in the last video. If you didn't watch the whole thing, I don't blame you. It was an hour long. But this is a chart that I had created several maybe months ago, actually weeks ago, almost a couple months ago. And what I have here in the blue is the Dow Jones Industrial Average. In the orange is the Fed rate hikes. These vertical lines are indicating is the point in time when we cross below what I call this weakening demand zone. That's when the housing market gets into trouble. And you can see the last time we crossed down and below it was in 2006, just before our housing market crisis started to take place. All right. And this coincides with our RSI being oversold. We have not skirted below either of these weakening demand zones or this red line down here on my RSI since 2006. All right, since we hurtled back above it in 2009, we've been above it. I mean, there's always that COVID-19 exception. That is an anomaly. We throw that data out. All right, that's never happened before in world history. We can't really count that data. So I will continue with my statement here that we have never crossed below this red line down here on the RSI, nor have we crossed below this weakening demand zone since the weakening demand zone, we really didn't get back above that firmly until 2014. All right, so since 2014 in this case, and down here since 2009. So this is data that we need to really pay attention to, guys. Now, what I find really interesting from a historical perspective is how the Fed reacted once weakness in the housing market was recognized. You can see here I have captioned that in 2006, the housing market crash had already started, and it wasn't really recognized in except for in cities like Detroit, all right, where it had already begun. All right, and again, here over to present day, we have just crossed below that threshold, that weakening demand zone, and we really have not, you haven't heard the media talk much about housing market crisis yet. I mean, there's segments and articles and so on and so forth, and you can go on YouTube and see, certain those realtors or flippers or whatever that are in the housing market already in a state of panic. But we're just now recognizing overall in the mainstream weakness in certain city markets, of course, that first began in Phoenix, Las Vegas, Austin, etc., etc. All right, so just like back here in 2006, we're just now starting to recognize weakness in the housing market. Now, the Fed should and is already aware of this, I would say. What did the Fed do last time they were aware of this weakness in the housing market? Well, it wasn't a full 2 months until after we had crossed down and below this weakening demand zone that the Fed actually paused interest rates right here. All right, that's a full 2 months after we crossed below that threshold. So if the same thing occurs present day, this threshold was drawn on September, and we have October and November. December, I still expect a little bit of a rate hike. I don't expect the Fed to go hard, 25, 50 basis points, but it's possible that they do surprise us with a pause. I don't expect the pause till January, though, quite honestly, guys. That's when I think the pause comes, is in January. Anyways, that would represent similar action as what was taking place over here in 2006. It took 2 months before we crossed this threshold, before the Fed really paused anything. So in this case, it would be a full 3 months, all right? Somewhere down here, the Fed pauses rates, and then look how long it took before they started to do their QE, quantitative easing. It took a full 12 months from the time of this pause, 14 months after the housing market fell below that weakening demand zone, before they actually injected money into the system again. So again, that would be what I expect over here as well. A full 12 months of pause, at least a year of pause, and maybe 14 to 16 months before the Fed actually does inject money back into the system. In the meantime, what was the Dow doing, which is representing U.S. markets here? The Dow is in blue. Once we cross below this threshold, the Dow was still rising up. You see right here? And the top did not come until a full, let's see, what is this? September 2007, and this line starts here in April 2006. All right, so a full year and a half really after we fell below, that is when we reached our top in the U.S. markets. And this is supports my theory of a blow-off top here, which I have been purporting here for the last 6 months or so. And I know you guys, most of you guys are crypto traders and have not talked very much about crypto. Why have I focused so much on these markets? Because I have expected a spillover from the markets into the crypto space. Now, we have seen definitely a big, back to our chart here, a big disparity between, and this is our S&P 500. I'm going to switch to the daily here. Oh, we will talk about this as well. We will talk about this. A crossing of a major trend line. But in the meantime, my point was, and I wanted to stick Bitcoin up, the disparity we are seeing between price action in the S&P and crypto. You can see that's not the way I wanted this to chart out. Hang on one second, guys. Bear with me as I do this live. I'm going to do new price scale and then close this out. That's a little bit better, I guess, ish. All right, so here's FTX crash. All right, what happened when FTX crashed? Of course, it affected crypto, and crypto just crashed along with it. But it did not affect the stock markets. All right, look at what happened in the stock market space. We just continued to traject upwards until the point where we're at today. All right, so that part I had not foreseen. Of course, you can't really see events like FTX in the future unless you're amazing at breaking down company balance sheets and fundamentals and all that stuff, which I don't really do. I do technical analysis, as you guys know. But I know that there are some people. I just read on Matt Taibbi on Substack. Was it Matt Taibbi or maybe it was Berenson? Had a guest on who had on Twitter in a public space criticized SBF beforehand and had warned his followers that FTX was a fraud. So there are a few out there, naysayers. Of course, one of the reasons why, FTX did as well as it could only travel up on hype. All right, you can't short in that space. You couldn't short FTX. All right, so it could only travel up on hype, and you need those short sellers in a healthy market. Otherwise, this is the kind of thing that you get. And unfortunately, we just didn't have that opportunity, those of us who were naysayers about SBF. All right, so there is that disparity, but my hope is that crypto will catch back up and follow the trends that are happening on the broader markets. And I have talked about this below off top for quite some time. Let me zoom out here. We'll review it one more time. This right here is wave 1 to the top here just before our crash in COVID, which formed wave 2. Wave number 3, longer and more extended. Wave number 4 came to our bottom here, rested perfectly on our support. I was very concerned at this point when we were down here that we might break this bottom level of support. And then this thesis that I have here regarding Elliott wave and our blow off top would be incorrect. But we did not. We maintained that support. And I'm going to break this chart down a little bit. And now wave number 5 is already underway. All right. And I expect us to reach 5,000 to 6,000 SPY, S&P 500, before this bull market comes to a gross end. And I want to show you this secular bull market. I know I mentioned that earlier, that we have been in a secular bull market since 2009. And let me show you what I mean by that. See this black trend line? Started drawing this over here in March of 2009. With the exception of COVID, of course, once again, an anomaly that doesn't count. We have never broken below this this trend line. All right, this is our secular bull market, all of this here. And so this little drawback doesn't even come, really didn't even hardly, except for a short amount of time, has come 50% back in line with this trend line. So as long as we remain above that bull that bullish ascending trend line, we are in a secular bull market. All right. Now let's zoom back into our other chart here and talk about a break above this particular trend line, this descending trend line, which we have been under since November of last year. And now just today have confirmed. Why do I say today? Because I like to see 2 or 3 candles. This is the third candle, and this, my friends, is a hammer candle. That's a bullish candle. Not only did it stay above this trend line, but it's a bullish candle which is indicating to us that we are going to continue this upward trend and continue this blow off top that I have been talking about, all right, that I've been discussing. And we have support for that thesis from all of this disinflationary data. We have support with look at the dollar. It continues to crash. We're now below the 200-day moving average, coming down strong. And look at this, guys. I see this right offhand. I saw this just before I started this video. See this purple trend line I have here? That, actually, I'm just going to draw it out real quick with the market, is a head and shoulders pattern. Very clear. And we have just broken that neckline. And so I expect us to come down hard and fast from this head here. This dollar will come down quite a distance before it really finds support. Probably down here somewhere, I would imagine, is where it finally finds some support. All right. So we have a long ways down for the dollar. And another thing that I want to show you here on the dollar chart, let's zoom out and show you this line that we have been under as long as we have remained in the secular bull market. Now my chart just stopped zooming out for whatever reason. Don't know. Let me put it on weekly just to see if I can get it. All right, so we're on weekly here. See this red trend line? The dollar has been under this trend line since 2008. All right, and 2009, March of 2009, when I started drawing that line on the SPY, is when we first touched our heads against the tops, against the bottom side of this ascending trend line. All right, we have only touched it now 2 times since then, and this up here is the 3rd time. And I told you guys we're not just going to break straight through that. In fact, I think it's all over. We hit our heads on that, and we're going to come down. Now this head and shoulders pattern is playing out. So we have a situation here with the dollar confirming what I was saying about our blow off top. I only have 3 minutes left for the trading view, people. So I'm going to cut this video off at 20 minutes this week. We have the VIX here also confirming nothing but red candles for the last 2 months, guys. This is just incredible. Fear is way down. That also is confirming our move in the upwards direction. Now, I've talked 17 minutes about stocks. I really don't need to say much about crypto at this point. Crypto is in a high state of fear and uncertainty due to the FTX fiasco and crash. We have come up into resistance here at 17,400 approximately. We have just touched that. We have kissed the underside of that 17,400 resistance. The big question is, will we break through? The only way I see crypto becoming bullish again is versus coming back down to test this support zone, which is descending rather rapidly. And should we test that again, that price would be anywhere from 10 to 12,000, guys. My battery is also running out on my camera, so I got to make this quick here. All right, so 10 to 12,000 if we come back down, touch the support zone again. Only way I see us breaking to the upside and becoming bullish again in the crypto space is if this market continues to ascend into the heavens as rapidly as it currently is or faster. Then at that point, the broader markets may have some pull on the crypto space and help us out. All right, guys, that's all I have for this week. Hopefully that helps. And if it did help, please give me some feedback, whether constructive or deconstructive. I care not. I don't get offended. If you have something to tell me that I could do better, then please, by all means, post in the comments, send me a private message, whatever it takes, guys. I want to give you the most valuable information that I can when I have time to do so. And of course, I have not been putting out very many of these videos due to time constraints here. I do this as a hobby, but I still like to do it. And if there's anything that I can do during my practice video runs here to make it better, please let me know. All right, until the next video, guys, peace, y'all.